Hey everyone, welcome back to Corporate Decoder, the place where we decode the secrets hidden within those massive corporate filings. Today, we're diving into Sempra's latest report, and let's just say they're making some pretty big moves in the energy world. Moves that might just reshape how we get our power. Imagine a company that is essentially a giant in the energy sector. Think of Sempra Energy. They're a big deal in North America, especially with natural gas and electricity. They've got operations that stretch from California all the way down to South America. Usually, when we look at these filings, we're digging into their regular performance. But this time, Sempra is announcing a massive deal that is changing the game for a big part of their business. So, what is the big news? Sempra is selling off a significant chunk of its infrastructure business. The part dealing with big energy projects, they signed a deal to sell 45% of their shares in Sempra Infrastructure Partners, along with the controlling interest, to a group called KKR, which is a big investment firm, and their partners. Think of it like selling a major piece of your company, future growth, to a very wealthy investor. This deal is worth a whopping $9.99 billion. Now, this $9.99 billion isn't just a pile of cash they get tomorrow. It is structured in a few parts. First, $4.65 billion will be paid in cash when the deal officially closes. Then, there is another $4.14 billion due in late 2027, and this amount will grow with interest. Finally, there is a roughly $1.2 billion payment due 7 years after the deal closes, also with interest, and this amount will also increase over time. So, it is a mix of immediate cash and payments spread out over many years, with KKR essentially financing a big chunk of this transition. But that is not all. The final price isn't set in stone. It will be adjusted based on things like the company's debt, how much cash they have on hand, and how much they spend on new projects by the end of this year. There are also some other interesting twists. KKR's transaction costs, which are about $337.5 million, will be deducted from the purchase price. Sempra also has to pay a development credit of $340 million over 2 years, starting next year. And get this, there are even more adjustments tied to how well some wind power projects perform and costs related to a big liquefied natural gas project in Texas. It is like a complex financial puzzle with many moving parts. Speaking of that big liquefied natural gas project in Texas, well, it's called the LNG Phase 2 project. Sempra Infrastructure Partners just gave the full go ahead for this massive project. This second phase is going to be huge, adding 2 new LNG trains plus storage and other facilities. They're re-estimating the cost to build this monster to be around $14 billion. That includes a significant amount to buy into common facilities that will be shared with the first phase. This really shows their commitment to expanding their role in the global energy market. To help fund this, they're bringing in more investors. Blackstone Credit and Insurance is leading a group that is investing a substantial amount, around $3.4 billion up front, with another $3.6 billion coming over time. Sempra, subsidiary, will hold the remaining 50.1% of this particular project entity. This structure means that while Sempra's subsidiary will appoint most of the managers for this project, the investors will have certain approval rights. Distributions from this project will be split, with the investors getting a bigger piece initially, 59.9%, and Sempra's part getting 40.1%. But here is where it gets a bit dicey. If certain things go wrong, like the project not finishing on time, or if it acts performance, or if the contracts for selling the LNG fall apart, Sempra's affiliate might have to pay the investors a big sum of money. After that payout, Sempra's subsidiary would then have the option to buy out the investors and own the whole project. It is a way to get funding while managing risk, but shows the pressure to perform. Now, let's zoom back out to the parent company, Sempra Infrastructure Partners, and how it will operate under this new ownership structure. The new agreement, called the Amended and Restated Limited Partnership Agreement, sets up a board with representatives from KKR Sempra and another big investor, Abu Dhabi Investment Authority. KKR, as the majority owner with 65%, will generally have control. However, Sempra still has some important say. They have approval rights over key decisions like making distributions, selling off assets in subsidiaries, appointing a new CEO, approving certain big spending, and making the final decision on new projects. This means Sempra is not completely out of the picture. They still hold some crucial veto power despite selling the majority stake. They also have to distribute at least 85% of their cash flow quarterly. This is meant to ensure that the investors are getting returns. There are also restrictions on who can sell their shares, and when Sempra itself is restricted from selling its remaining shares until 2029. And for the other investors, if they want to sell, there are first refusal rights for KKR, meaning KKR gets the first chance to buy. This creates a bit of a locked-in ownership structure in the short to medium term. As a result of this agreement to sell, Sempra is preparing to reclassify this part of its business as something they intend to sell. This means they stop recording depreciation, which is the accounting way of accounting for wear and tear on assets. They are also going to record a significant income tax expense estimated around $500 million. This charge is for a few reasons, mostly related to adjusting their future tax liabilities and accounting for tax benefits they might have. It's a big accounting maneuver to get ready for the sale. Scroll SA Securities registered pursuant to Section 12(b) of the Act to Scroll. Let's quickly look at what Sempra has registered for trading. You'll see their common stock listed on the New York Stock Exchange under the ticker symbol SHRI, and their subordinated notes, which are essentially a way for them to borrow money, are listed under SHRI on the same exchange. This just shows how they are structured and financed in the public markets. Finally, to go along with this report, Sempra has also released a slide presentation. This presentation gives a visual summary of the key financial details of the deal we've been discussing, especially the purchase price breakdown and adjustments. It is basically their way of saying, here are the highlights laid out simply. So, what is the bottom line here? Sempra is making a strategic shift by selling a large stake in its infrastructure arm. They not only raising a huge amount of cash, but also bringing in partners with deep pockets and expertise to develop massive projects like the PA LNG Phase 2. This allows Sempra to reduce its immediate capital burden for these giant projects and focus on other areas. However, there are always risks involved. The deal is complex, with many adjustments and conditions that need to be met before it is finalized, expected in 2026. The success of the PA LNG Phase 2 project, which is a colossal undertaking, is critical. If it falters, Sempra could face significant penalties. Also, the reliance on future payments from KKR and others for the infrastructure sale means Sempra's financial health in coming years is partly tied to the successful execution of these agreements. On the flip side, the opportunity is enormous. The global demand for LNG is strong, and Sempra is positioning itself to be a major player in supplying it. This partnership with KKR and the massive investment in the PA LNG Phase 2 project could lead to substantial future profits. It's a bold move that signals Sempra's confidence in the long-term energy landscape, particularly in liquefied natural gas. They are essentially de-risking their balance sheet for these massive growth projects while still retaining significant influence and future upside. Now, looking at these results more broadly, Sempra appears to be making bold strategic moves to capitalize on the growing demand for liquefied natural gas, which is a strength. However, the complexity of the sale agreement and the sheer scale of the PA LNG Phase 2 project introduce significant execution risks, which are weaknesses. The company's direction seems to be shifting towards a more partnered approach for large-scale infrastructure development, which could be a smart way to manage capital and risk. Alright, that is our breakdown of Sempra's latest filing. What is your take on these numbers and what they signal for the company's future? Do you think this partnership is a masterstroke or a gamble? Drop your thoughts in the comments if this analysis was valuable. Hitting that like button really helps, and subscribe for more deep dives. Don't forget to check out the Discord in the description for more discussions. Thanks for watching. See you next time.